Welcome back. So now we're going to keep layering in features of the indicator. So in a previous video, we spoke about how we can use yields or bond yields as a confirmation for trends, that our best quality trends will be when the synthetic spread and the yield spread are in alignment. Now, a feature of this indicator that can help us identify that, well, particularly when we have a strong synthetic spread, is the feature of candle coloring. So to turn on candle coloring, come to settings, the indicator. We'll scroll down. And down the bottom, you'll see this option, enable candle coloring. I'll switch that on. Select OK. Let the indicator regenerate and we will get this displayed. So what is candle coloring for? Candle coloring is only related to the synthetic spread, so this white synthetic spread line. And it will only color candles based on certain criteria, with certain criteria met. So those are when the strength of the synthetic spread is greater than 5 for longs or less than -5 for shorts, and the correlation value is greater than 0.5. Now, what's important to note is that the colored candles are not buy or sell signals, so you need to use them in conjunction with other information. But what they do highlight is when we are potentially coming into areas or periods of significant strength or weakness in the currency pair that you're trading. So the best way to demonstrate how the candle coloring works is we'll use TradingView's replay feature. So current situation, we are trading the pound US dollar on the 5-minute time frame. It's currently, well, my local time, it's 10 past 3 in the afternoon, which is pre-market. So 50 minutes before Frankfurt Open. The synthetic spread is pointing downwards, and which would indicate weakness in the currency pair. Yield spread's really not doing anything. So let's step forward and see if we can identify how this works. Right, so what's happened? The yield spread is pointing upwards, synthetic spread is pointing downwards. So potentially we're looking at area of potential ranging, or as mentioned in previous video, that the yield spread is a leading indicator. So we may see price follow it and go long. Okay, yield spread is pointing upwards, synthetic spread is flattened. And look what's happened. We notice that back here, the yield spread turned to go long, and we can see that the synthetic spread has followed. Now, as I've said many times, was this always going to happen? No. But when you see this situation, that is when we get our A1 trading opportunities, and we can see that the candle has now colored green. Why? Because of synthetic spread. We have a look over here. The strength value is 6.9, so it's greater than 5. And the correlation value is also greater than 0.5, 0.89. So we now have a green colored candle. Let's continue to see what happens. Yep. Continue up. So that would have been a really good trade. We've seen that the yield spread has turned before price has turned. So we'd be looking at that and we'd be saying to ourselves, well, let's see if price follows it. And sure enough, even though candle or two afterwards, it does the same. All right, we'll keep going, see what happens. All right. notice that the yield spread has started to weaken. Does that mean it's going to turn? We don't know. We'll continue on and see what happens. But we have noticed with the weakening of the yield spread, a corresponding weakening in price action. All right. Now, price is not always going to turn as the yield spread turns. But as I mentioned earlier, it is a leading indicator. So if I was to see something like this, where the yield spread has turned, despite the fact that price is still going up, here, that to me would be a signal to potentially exit the trade, but we'll see. Yield spread's pointing down, synthetic spread's still pointing up. You see if price turns. Now, one thing I'd like to point out is that we had this long price action here, so that's a really good move. And we also noticed that yield spread and the synthetic spread are all moving in conjunction. That's a great trade. Now, again, as I mentioned earlier, that yield spreads are a leading indicator. So let's see what price is going to do, whether price is going to turn. But yeah, as the yield spread starts to weaken or reverse, that's a signal. Potentially close the trade. Let's continue. Seeing ranging price action. Yield spread still pointing down. It's going sideways. Okay. Now, as I mentioned before about yields and as a confluence, it did point down. The synthetic spread is pointing up. And as I mentioned before, what happens when you get that kind of scenario happening here, you'll get ranging price action. Now, if we had gotten out of this trade at the moment, the yield spread is starting to flatten out, that would have been a really good trade to get out there. Also notice that the candles are no longer coloring because they don't meet the criteria for color candles, being plus or minus 5 and greater than 0.5 in the correlation. But we did see eventually, with the yield spread turning down, price turned down. And we have an opposite color candle. And we have the yield spread and the synthetic spread pointing downwards. Let's continue. Wow. Okay. So I hope this really does make sense, that it's really important to use both the synthetic spread and the yield spread. I'll keep harping on about this, but it's very important that you do not fight the yield spread. It will give you really useful and important information before it actually happens. Once the synthetic spread and the yield spread aligned, strong price action down. 10, which is as strong as it gets, and 0.82 on the correlation. Let's continue. Now we can see that the yield spread is starting to flatten and we've got this rejection candle. Now, why is that? Why didn't the price keep going down? Well, probably, and we'll go into this in later videos, this would be an area of liquidity. So in old terms, support. So that's probably why prices rejected off that level. But in any case, the yield spread has flattened out. So that would be a justification as to get out of that trade. So if you've gotten in here, you would have ridden this long candle, and here, get out. That's a successful trade. You would have made money on that. And remember, we're in and out. This is scalping. We're not looking for huge long runs, even that does happen. But better to take a small profit than to be greedy and look for a long run. You're given all the information here. You could have entered at the close of this candle, ridden this candle down. All right. Yield spread flattens. Get out here. There's absolutely nothing wrong with that. That would be a good trade. Let's continue on and see what happens. Yep. Okay, so with the initial flattening out of this yield spread, as I said before, would have been a good reason to get out of this trade. If you'd gotten out, you would have made profit. If you'd hung on, you would have just lost or handed back to the market all the profit from this big candle here. So yeah, it's important, don't be greedy. And as it turns out, with the flattening of the yield spread, the synthetic spread has started to turn. So yeah, so I hope you find this useful. As I said earlier at the beginning of this lesson, that the coloring of candles, which highlight strength and correlation, are not trade signals. You have to use them in conjunction with the other information that's given to you by the yield spread and the synthetic spread. So yeah, hope you find this useful, and we'll continue on in the next video.